Hi, this is Cayden from VIA Value Investing Academy. Now, thanks for joining another evening of our deep dive session. So before I start, I just want to make sure that all of you can hear me, right, while I share screen. Let me put my first slide up. And the first slide, right, says something like, beyond Singapore saving bonds and fixed deposit, what other low-risk investments are there? Yep. By the way, if you are able to hear my voice and see the slide that's just been projected, is it okay just type 1 so that I know that you can hear and see? Yeah, just okay. There are about 30 plus people who are joining this session, right? So I assume that you are able to hear and see the slides, but it's okay. So let me just get started. If you Google recently about investment, right, using keywords such as fixed income securities or fixed income, you will come to a page where you see many results, and all the results are related to like bonds, fixed deposit, banks interest, and so on, and including this one, right, by CNA. Yeah, beyond Singapore saving bonds and fixed deposit, what other things are out there? So this is just one of the article that was published on the 22nd of September. Oh yes, thank you. Yeah, so some of the names are quite familiar, like Sora, right? Yes, Sora. Okay, let's look at other search results. Singapore saving bonds 10-year high return hits record of 3.21%. Now, just to let you know that VIA has been talking about this Singapore saving bonds, I think, since it was launched a couple of years ago. And many years ago, not many people are interested in this Singapore saving bonds because the average return usually is about 2 to 3%. Yeah, but recently, because of the bear market, right, which is quite long as compared to last year March, somehow people are very interested in fixed interest securities or products. So this article was published on the 3rd of August, so Singapore saving bonds. And here, right, talk about other things else. What are Singapore treasury bills? Yeah, so we have Singapore saving bonds, we have treasury bills. Are they a good investment? And this article was published on 8th October, just very recent. So like I say, right, if you Google something like fixed securities Singapore, you see a lot of things. Yeah, all the fixed return instruments. Yep, so you can see all these things are over here, right? So I think the key thing is we want to talk about tonight is something called bonds. Yeah, since people are interested in this bonds over here, right? Beginner's guide to different type of bonds. So what I did was I just Google fixed securities. I didn't say bonds, right? But you can see that the search result pops up. First, are articles related to this word bond. So I presume that out of this 1.4 million search results, people are really interested in bonds. Yep, so let's talk about bonds. But before that, maybe I just want to share one company that most of you will be very familiar, right? Sadly say got SSB recently. Well, you're quite lucky, huh? Because the, how should I say, it's a high subscription. Yeah, if you got it, I think you're quite lucky, huh? Checking lottery, huh? Okay, so let me talk about this bond, right? Now, bonds predominantly, there are two types. One is a government bond, that means issued by the government, depending on which government you're talking about. And the other one is called a corporate bond. Yeah, so very quick, in the next 1 minute, I just want to share with you a very infamous or famous corporate bond, right? Issued by this company called HiFlux. And that was dated way back to 27th of May 2016. You can see the issue date over here. So here it says an annual coupon rate. Annual coupon rate is the interest rate. Singapore saving bonds about 2 to 3%, right? So can you see this interest rate, or rather the annual coupon rate is 6.6%. Wow, it's quite high, huh? Yeah, so 6.6%. So what HiFlux is trying to say is if you buy my bonds, which are also called perpetual bond, that means there's no deadline to this bond, right? Perpetual bond. Every year I give you 6.6%. So remember, since it's a corporate bond, this promise is made by HiFlux. It's not made by the Singapore government, which also means that even though they say 6% or 60%, one day if HiFlux didn't make it, you will lose the amount of money that you pass it to them. Okay, and it looks quite attractive, huh? Looks quite attractive. It's semi-annually. So now they pay you twice per year. So this is quite interesting. And then you look at this bond, right, was listed in our stock exchange. So a lot of people who have zero experience, sometimes they think that, oh, if anything that's listed is good. Yeah. So at this point in time, if we travel back in time, May 2016, it looks quite attractive. And then HiFlux was a like so-called popular company, right? Now, but the thing is, we have to be very careful. Not all bonds are good ones. Let's see what happens to HiFlux today. Yeah. So this article, I think, was published way back in 2021, if you remember correctly. Singapore high flux to liquidate after restructuring effort failed. In short, see this, judicial manager files for court application to wind up company. Right now, everybody should know high flux already gone case, right? And then not only that, high flux and its directors, including Oliver Lam, which was previously portrayed as the rags to riches story, right? Investigation for corporate government breaches. I tried to Google some information whether at the end of the day what happens to their investigation, but you know there wasn't any latest news. But in short, those people who bought the perpetual high flux bonds, they lose everything. Yeah, so I think the key thing that I want to share tonight is, yes, we all want to make some good money, but in order for us, right, to be prepared to invest in something, including things like bonds, which appear to be safe, but it may not be. So we need to know something. So what do we need to know, right? We need to know what to do and what not to do. Yeah, so it's very dangerous to put all your money into corporate bonds such as high flux and so on. So it doesn't mean that all bonds are good. So if some corporate bonds are not good, right? So now the question is, you must also know what to do. Yeah, so this number one very important, which is what we're trying to do tonight. Then of course, to buy bonds, we also need to have some money, right? So tonight, we're going to share something special. We're not going to talk about the high flux bond, which is already gone. So we're going to talk about what other people talk about. Yeah. So one of the key things that is so-called surface on the social media, right, is this thing called the Singapore Government Securities Bond. Yeah, so it was quite a long word, Singapore Government Securities Bond. So tonight we're going to go deep dive, right, and talk about this, so that at the end of the day you see whether is this something that suits you. But before that, I think it's important for us to talk about disclaimer. Short one, remember, VIA, Value Investing Academy, we are not licensed by MAS, but we enjoy sharing our research. So remember, right, let me start from here. So in no event shall VIA or any of our authors, which is me and Hillary, will be liable to any viewers, guests, or third party, right, for any damages of this kind arising out of the use of any content shared here. So let me just jump the gun, right? So remember, neither My Kinesis Investments nor VIA, Value Investing Academy, nor me, Hillary, of this case study tonight, which is the SGS bond, right, are operated or affiliated with any broker, dealer, or licensed financial advisor. So it's very important for us to make it very clear. Yeah, so I'm going to my job is quite easy. I just pass the buck to Hillary, right? So I'm going to pass the buck to Hillary, and Hillary is going to go deep dive into this interesting bond called the Singapore Government Securities Bond. Yeah, so Hillary, over to you.
Good evening, everyone. So this is Hillary here. So tonight we'll be doing a deep dive into the Singapore Government Securities Bond. So before I was doing this research, the only bond that I know that was offered by Singapore government was the SSB, which is the Singapore Savings Bond. So any other bonds was available, I was not sure of. But after this research, we will also jump into this journey to find out what other bonds does the MAS offered. So first of all, what is a bond? So when you see the word bond, this is the first thing that comes to your mind. For me, it is James Bond. But tonight, we are not talking about who is the next James Bond. So bond is actually a fixed income instrument where the loan is being made by the investor to a borrower, which this borrower could be a government or a corporate, meaning that the investor has a pile of money and then they give it to the borrower so that they can earn the interest income. So how does it actually work? So right now, the bond is being issued by a government or corporate. In order, by having this amount of money, they are able to generate funds, and then it will be paid back to the investor and as a principal and interest. So we'll deep dive further, like how does this actually work? I understand the meaning, but how does this actually work? So for example, an investor, they have a pile of cash known as a capital or the idle cash where they have no use. Some people would like to put it into their savings account with the bank or with a fixed deposit. So with this capital, then they pass it to the bond issuer, which is usually a government or a company, to buy their bonds. And then the bond issuer will pay out interest or coupons to them in a regular manner. Like for every year, they may pay out twice a year, or maybe every year only pay out once. So it depends on the bond agreement. So this cycle will keep on repeat until the bond matures or the bond deal ends. So how long does it end? It depends on the bond agreement. So the term for how long does the bond is being held is known as a tenor. So it's the holding duration of the bond. So for example, if the bond is for 5 years, so the bond issuer will keep on repeating the cycle to give out the coupons to the investors for the next 5 years until the bond matures. Then 5 years later, the bond issuer will pass back the capital back to the investor. So during this period, the money of the investor will be parked with the bond issuer while they are collecting interest income. It's as if like the investor is the bank. So they provide the money for the government or the corporate to do their investments or their infrastructures development while they are collecting interest income. So if you wanted to know more about what is interest income, you can watch one of our deep dive about DBS Bank and see how does bank earn interest income. Okay, so right now people will be thinking, what's the difference between a bond and a stock? So a bond is actually a debt instrument with a promise to pay the money back, like the example that we saw earlier. Whereas a stock is an equity instrument that represents ownership. That means when you buy a stock, you own a part of the company. And the company, if it's making good money, it will pay you back dividend for the money that you invested with them. So for bonds, they possess lower risk because they have a fixed rate. So the time when you purchase the bond, they usually say upfront like how much of the interest rate they will pay back for the money that you invested with them. And also because it's a fixed rate, so it's less responsive to the market fluctuations. But due to the current inflation situation, even though they are able to give you a fixed rate of interest payment, but you'll be having a lower earning potential. So we all know that by investing in stocks, there's a chance that the money that we earn in the stocks could beat the inflation. So there's a chance to earn more than bonds, and it also offers a better return. However, when we are following the hot stock tips from the internet, from social media, we are not sure whether is the company good or no good. Like for example, the high flux example that Cayden was given, it was able to give out 6.6% of the interest for the money that you invest with them. But in the end, when the company collapsed, you won't get your money back. So which is why it will possess a certain higher risk. So in order to invest safer, later Cayden will be sharing with you all about a very irresistible offer. So stay tuned. And now we will look at what are the bonds offered by MAS. So the Money Authority of Singapore offers these bond products to individuals, which are 3 types of it, and institutions, which are 5 types of it. But tonight, we will only look into individuals because for institutions, they are actually taking the money of various people and then help them to invest. But we as individuals, we do not hold the license to help people to invest. So tonight, we will only be looking into individuals. So these are the 3 types of bond is being offered by MAS. First is the Singapore Savings Bond, known as SSB, and then the Singapore Government Securities Bonds, followed by T-bills. So what are the benefits of them? First of all, they are fully backed by the Singapore government, so they have a AAA rating, and they are able to earn regular interest. And it's also another sound way to diversify your investment portfolios. So other than putting your money into the bank or fixed deposits or even put into the stock market, you can also consider to put your money into bonds as well. But we are not making any recommendation for tonight. It's just purely to share about the information that we find out. So tonight we will only be looking into SGS bonds. So what is an SGS bonds? It's a tradable government debt securities and debt instrument. So at first glance, it's like, okay, I know what is a debt security, but why tradable? Join us, continue with us, and then you will find out and you will know. So first thing is that for SGS bonds, they pay a fixed interest rate for every 6 months. So that means within 1 year, there will be 2 payments. And the bond maturities range from 2 to 50 years. So you can see below, they actually list out the tenor duration. So there can be 2 years, 5 years, 10 years, 15, 20, 30, until the most is 50 years. And also they are AAA credit rating. And SGS bonds actually has 3 different categories right now. So you can see that they have market development, which they focus to develop the local debt market. And infrastructure, there are 2 types. One is just the normal infrastructure, and the other one is the green infrastructure. So what is the difference between these 2? Green infrastructure means for buildings or infrastructures that are more environmental friendly. And how you can buy this, there's 2 methods. One is via auction, and the other is via syndication. So I know what is an auction, but what is a syndication? We will find out later. So who can buy these bonds? So individuals, including foreigners, they can buy this as long as they age 18 and above. So earlier we were talking about what is auction and syndication. So auction, we know that it's a kind of bidding. So there's 2 types. There's a competitive bids and a non-competitive bids. Whereas for syndication, the SGS bonds are actually offered by a group of appointed banks, and this is known as a book runner, to distribute these bonds to institutions or individuals. So in a graphic manner, it looks like this. So for a bond issuer, the MAS, they will issue the bonds to a group of banks, which is the book runners, and from them, they will appoint dealers to distribute the bonds to investors. So this is how the syndication works. So currently, when you purchase the green SGS infrastructure bonds, you have to purchase via syndication. But for the other, like the market development and also the infrastructure, you can purchase via auction. Okay, so now, earlier on we know how does the bond works, but how are you going to earn interest income from SGS? So for example, you have about 1,000 idle cash that you wanted to invest, and this month the interest rate for SGS is about 2%, and the duration for the bond is about 5 years. So right now you have this $1,000, and then you pass it to MAS to purchase the SGS bonds for the next 5 years. And the next 5 years, the SGS will be giving out the coupons. For example, you will be able to collecting $20 in 2 payments for every year. So every payment you'll be receiving $10 for the $1,000 that you invested. So this cycle will be repeating for the next 5 years until the bond matures. Then the government will give back your $1,000 while at the same time you're collecting the coupons. So the longer the tenor, the more interest income collected. Okay, so right now you'll be thinking, okay, so this is how SGS bond works, but what are the pros and cons of this bond? So first of all, it's suitable for people to put their spare cash. That means they are not needed in the near future to earn the interest income. But do take note that there's no early redemption. If you wanted to have early redemption, there might be penalty or capital lost when you do the redemption. But another thing that it's tradable on secondary market means that even though you cannot redeem early, but you can buy or sell on the secondary market, which is something like SGS exchange. And from there, you'll have possibility to earn capital gains by trading these SGS bonds. And in Singapore currently, there's no tax or tax exempt on the interest income and the capital gains earned. But do take note that because if there's a low demand for SGS bonds, then it might be challenging to find a seller to sell this bond. And also because due to the market condition where there's supply and demand on the SGS exchange, the prices may rise or fall before maturity. So if the price rises, you may earn the capital gain. But if the price falls, then you may not be able to sell according to the price when you first bought it. Okay, so how do you purchase the SGS? Okay, so first, you can purchase it by making a bid during auction or syndication. So for auction, you can buy with cash, SRS, or your CPF funds, but syndication is only by cash. And how much do you buy the SGS? So minimum, you have to pay 1,000 for the SGS bonds, and in multiples of 1,000. So for example, you wanted to buy SGS, so it's only 1,000, 2,000, 3,000. There's no 1,000 or 1,050. Okay, but currently there's no overall limit. So the limit is set during the auctions. And then when is the cut-off time? So if you were to purchase from a bank, it's like 1 or 2 days before the auction day. So you have to check on the website for a much more accurate date. Another way you can purchase SGS bond is on the secondary market, which is through the DBS, OCBC or UOB branches, or via the SGX, which is through the security brokers. And how much is the investment amount? It actually depends on the price, on the supply and demand on the SGX exchange. Okay, so right now, we will compare some of the interest rates with other investment vehicles. So first of all, for SGS bonds, we can see that for this year, the rates are varies, and also in the month of April is one of the highest, and the tenor is for the next 5 years. But in the latest one you see in October is about 1.875%, and it is reopened. What does it mean by reopen? Reopen means that you can see that for this bond, the tenor is about 30 years. So during these 30 years, imagine that when it first launched in 2020, but then it only expires by 2050. Within this period, no one can purchase this bond. But in the event that when they reopen this bond, meaning that they allow the investor to purchase this bond, like for example in 2030, so during this time, the investors can purchase these 30-year bonds. So this is the meaning of reopen. Now we will look at inflation. According to the latest numbers released by the MAS, the current headline inflation is about 7.5%, but the core inflation is about 5.1%. So when we compare the inflation against the SGS bonds, it's a bit hard for the SGS bonds to fight against the inflation at the moment. And when we compare against the CPF, which most Singaporeans and PR have to contribute, so the ordinary account actually provides about 2.5% of the interest, whereas the SA account offers 4% of the interest. So it's much more higher than the SGS bonds as well. Whereas for the bank savings rate, currently the base interest for the banks are usually 0.05%, but there's latest news that released that some banks, they actually offered higher savings rates with quite high. And also for fixed deposit, sometimes when the bank provides some promotions, they will offer higher fixed deposit interest. And it depends on the amount that you deposit into the bank and also how long is the money kept with the bank. Okay, so now we'll compare between SGS and SSB for this session. So for SSB, it's not tradable. So once you purchase it, then it's not able to trade on the SGX. Whereas for SGS, you can trade it on SGX. However, for SSB, you can redeem the money in full anytime that you want. But do take note that it's not an immediate withdrawal. You have to wait at least about 30 days before you can get back the money. So should you wish to withdraw the money, you should plan ahead. But for SGS, there's no early redemption. And SSB, you can purchase either with cash or SRS, and SGS is via cash, SRS, or your CPF funds. So the minimum investment for savings, Singapore savings bond is about 500, and Singapore Government Securities is 1,000. There's a max amount for Singapore saving bond, which is 200,000, but there's no limit for the investment amount for SGS. So the duration for SSB is about 10 years, and the duration for the Singapore Government Securities is about 2 to 50 years, depends on the announcement of MAS. And another difference between these two is that there's a step-up interest rate by SSB, but the interest rate for Singapore Government Securities is fixed. So right now we'll compare like what does it mean by step-up interest and a fixed interest. So for Singapore Government Securities, fixed interest means that within that month that was being announced, the interest is fixed for the next duration, holding duration of the bond. So for this example, in October, this bond is being released and offered a 1.875% of the interest for the next 30 years. So for the next 30 years, every time when you receive an interest payment, it is about 1.875%. But for SSB, step-up interest means that for every year, the interest will slowly increase. So after 10 years later, the longer that you kept the funds with SSB, the higher the interest it goes. So by the 10th year, the interest is about 3.21%. So this is what it means by step-up interest and a fixed interest. Okay, so to conclude all, SGS is actually fully backed by Singapore government, and it has a AAA rating. they are offering the fixed interest rate payment twice in a year, and it's tradable on the secondary market. But do take note that because of the interest rates is fixed, the earning potential for this bond is lower compared to others, and you are unable to redeem it early, and there's a penalty imposed. And even though you can try to sell it on the secondary market like the SGS, it will be quite challenging to sell if the demand is low. And there's also the inflation or default risk. For default risk is for corporate. Government, especially Singapore government, it will be a bit lower chance. So with that, I end my presentation and I'll pass it back to Cayden. Thank you.
Ladies and gentlemen, welcome back. Right, you may notice that for tonight it's quite fast. Usually we take like forever, right, to finish a presentation. You got detail, EPS, debt to equity ratio. But today is really one of the shorter one, right? Shorter one, yeah. Because just to let you know, tonight we are trying out something short because previously it was really long. So we want to see which one is more popular, right? So if you pay attention to my slide over here, I just need my colleague to put up the slide over here. Now, if you're able to see the slide, you can see this is the slide where Hillary talks about the difference between a Singapore saving bonds and a Singapore government security. There's one more word, bond. So this is a bond, this is a bond. Now, I just want to share with you my personal thoughts, right? Based on the information that Hillary has said, you may notice that this Singapore SGS bond, right, the interest rate is about 1.875%. And this one will be fixed throughout, whether is it 5 years, 10 years, depending on the duration that you sign up for. So this is quite fixed. This is quite fixed, right? Now for the Singapore saving bonds, yeah, on the left hand side, I think right now the interest is on the higher side. I think it's about maybe 3%. So you realize that this is higher than this. Yeah. So once you get this, let's say it's 3%, right? It's a step up interest in the sense that over time, this 3 will get a bit higher, maybe 3.1, 3.2, 3.3, 3.4. Yeah, over time it gets higher, but over here it's fixed. Yeah, once you get this, that's it. But here it gets better and better, right? And then you may notice that the minimum investment is 500, and this one, remember, is in quantum of 500. So 500, 1,000, 1,005, yeah. And then here minimum is 1,000, yeah. So even though here there is a cap of 200K, here and then there's no limit. I'm just thinking if you have more than 200K, I mean, why would you want to put the more than 200K into a bond? Yeah, bond, So remember, this is our opinion, it's not a fact, right? So I think if you have 200K, we put here, I think enough already, enough already, So even though here it says duration of 10 years, now I just need to share with you one thing, right? Is for Singapore saving bonds that you can redeem in full anytime. Yeah, this is one good thing, redeem in full anytime without any penalty. And then the interest that you so-called accumulate, right, they will return back to you prorated, yeah. As compared to here, can you see here? No early redemption will have penalty. I mean, yeah. So I think if I'm a layman, I look at these two, the Singapore saving bonds appear to be more attractive. This opinion, not recommendation, right? Then I don't get a cut out of this, yeah. So because number one, interest it seems to be higher. There's no early penalty because years down the road, within 10 years, who knows, something may happen. You may need the money. And then here, right, not only you get a lowest interest, then you want to take out also penalized. Then here, what I don't know. The recent one 1.875. Is it how many years? 30 years. Yeah, 30 years. Oh my goodness, 30 years. Yeah, for me, I went through cancer 3 times. I also don't know whether I can survive these 30 years. Yeah, I think it's a bit too long for me. Yeah, so for me, I'm not very sure about you. For me, if I want to really put some money into bonds, yeah, outside the scope of bank and so on, I think the Singapore saving bonds appears to be attractive to me. Okay, yeah. But before I carry on, I just want to let you know that it's a bond. The intention of a bond, right, which is whether the SGS bond or Singapore saving bonds is not to kill inflation, it's not to beat inflation, because the inflation 5.1% is really high. Yeah, so we must understand that the purpose of the bond is not to beat inflation, but is to provide a better alternative to banks. So let me just lay out the cards, right, so that you know, so right now I have all the cards, I have all the dishes in the buffet. So which one should I choose? So let's start with inflation. Inflation, right? Yeah. So this 3.5% is quite interesting. This was a figure, a research done by Hillary, that he said in Singapore, the average annual increment, right, is about 3.5%, which means that if your existing company give you 4%, you have to thank them. Yeah, if they give you 3.5%, it's normal. Yeah, so 3.5%, right? So 3.5% obviously is less than 5.1, 5.1, right? Then the next one is the bank's interest. Yeah, bank's interest. So just now Hillary talked about the 0.05, which is a very typical non-fixed deposit type of interest. And then of course, banks, right, for the various local banks, including foreign banks, right now they want to take investors' money, right? Wow, so they raise the bank's interest. Now, bearing in mind that it's not easy to get their 4.8 or 3% or whatever, because they have a lot of requirement. Like for example, minimum you must put in 100K. Wow, that's quite a bit. And then I think you need to use their credit card. So different banks got different requirements. So even though this 4.8, 4%, whatever appears to be high, but they a lot of fine print. So you really need to read the fine print. Yeah, Singapore savings don't have, but it's about 3%. So remember, right? Yeah, it's just to provide alternatives. So with all these choices out there, you have to see which one suits you, right? And of course, this is something that we know, which is the CPF. But of course, CPF, even though here looks very nice, 4%, once you put in, I cannot take out. Yeah, so these are the four cards, and then you have to see with the sum of money you have in the bank, and your objective is not to become rich. Your objective is to have a better alternative. Right now you may be getting 0.05. Then you'll be thinking, okay, which one should I do? Yeah, which one should I do? Yeah. Now, and of course, which choices that you make out of these four, right? You also depending on your lifestyle. If you do not mind a $2,000 lifestyle every month, then I think it's okay. But if you want this kind of lifestyle, I still remember last time our ex-Prime Minister called Goh Chok Tong, right? Yeah, last time he said Singaporean is going to have a Switzerland lifestyle. Yeah, so if you want to sit here, right, and then look at the sea and the mountain, right, then you have to ask yourself the previous choices. Is it good enough for you? Okay, So life is about choices. So maybe what I'll do is, of course, the question is what kind of lifestyle do you want? You want to look at Mount Faber, right? Or do you want to look at this? Okay, So of course, what we're going to do is I'm going to play a very short video. Just a quick intro, right? Monica is actually one of our grad. And then, of course, Monica, like most of us, she has her own dreams. Last time she stayed in HDB like most of us, but she said that, okay, my lifestyle is going to be this. Yeah, because I work so hard, I want a certain kind of lifestyle. But Monica, like all of us, we cannot say, oh, I want a Switzerland lifestyle and then do nothing, right? Yeah, so she did something. Yeah, what did she do? Later I'll share with you, but let's listen to Monica's inspiring story.
The feeling that you have when you work because you want to, not because you need to, is priceless. Hi, I'm Monica, and this is my 100,000 milestone story. I started investing right after I finished the course with VIA. After a few months, I started to earn more than my full-time job. And then I'm already planning for my retirement. Early one. Investing changed everything in my life. Look at this place. I mean, like, seriously, I never even thought that I could stay in some places like this. My previous house, okay, I mean, like, it's a home, right? But you always have a dream to be better, to live better. And with investing, it just accelerates the process. The reason why I end up with investing is because I think freedom is very important. Freedom to be able to choose where, what you want to do, where you want to go, without having to worry, oh, how much do I have left, or whether I have enough for education, for my son, or for what, I always wanted to do something for myself. apart from just the 9 to 5. I guess the saying's really true that when the students are ready, the teacher will appear. So I guess I was at the right place at the right time, and when I do research or Google about VIA and Cayden, yeah. I think the most valuable lesson I learned, actually I already sold when Cayden shared about CFOS during the masterclass. But then apart from it, the entire 4 days course really equipped us with not just knowledge, but the mindset of never lose money in the first place. I think some people think that investment is like scary or learning how to it's difficult. For my case, I have no background in investment, accounting, no knowledge. I love numbers, only numbers with the dollar signs in front. And the basic I know is only you buy low, sell high. I mean, even my 12 years old son knows how to do it. Like, seriously, I was a noob. And I want people to know that it can be very simple. Even having a full-time job, being employed, single mother, juggling with home and work, and I still can do this, then I think anyone can do it.
Hi, ladies and gentlemen, welcome back. So before I move on to the next slide, I just want to thank Monica for allowing our team, right, to visit her beautiful condo so that we can shoot here at the balcony together with her son. So you realize that it's also not being easy being Monica, because she's a single mom, she needs to take care of a kid, and ultimately she like all of us, right, as a normal human being, we always want to do well financially. Yeah, so I think at the end of the day, we want to have more choices. So I just need the slide to be up, right? So coming back to this slide in which I've shared in the very beginning, so ultimately, there are two key preparations to invest, whether is it bond, SGS bonds, Singapore government, and so on, right? So once we present the choices, as investors, we need to know what to do, whether you want this, whether you want that, what are the things that we don't want to do. Okay, so this is very important. And then just now we talk about, let's say in Singapore saving bonds, we need multiples of 500. Yeah, so you always need some cash. Yeah, so I'm going to come to this slide, right? I think most of you should know this, like grandpa over here. His name is called Warren Buffett, which is the #1 investor all times. Now, there was once somebody asked him, right, hey, if I'm a layman, I got this small sum of savings, what should I do? Now, remember, this recommendation comes from the mouth of Warren Buffett, right? And what did he say? He said, hey, can you put 10% of the cash in a short-term government bond? Now, remember, in this case, he's referring to something generic. But if we want to relate to what we have in Singapore, right, at least based on what Hillary said, remember there are two. One is Singapore Saving Bond, and the other one is Singapore SSG, right, Singapore Securities Government Bond. So if we want to fit one of this to Buffett's short-term government bond, then it has to be this SSB. Yeah, the reason why I say so is because, remember, for Singapore saving bonds, you can redeem anytime. So if you redeem 1 month later, it's short-term, right? You redeem 1 year later, it's short-term. But if you kena this SSG, right, which is 30 years, then you no longer certify Buffett's short-term bond. So I'm just guessing, right? The reason why Buffett specifically talk about short-term bond is because anytime when you want it, you could liquidate it. And then you could turn this cash into ownership of a stock. Yeah. So I think if you relate it, at least from my interpretation, the closest is Singapore saving bonds, and unlikely is Singapore Securities government bonds. Okay, so this is #1. But let's look at the other piece. So right now, as a layman, right, we will have a short-term 10% government bonds. And then he said that the remaining 90% put in a very low-cost S&P 500 index fund. Now, later on, I'm going to play a short video talking about Buffett's, right, recommending this S&P 500 index fund. But before that, I just want to let you know that since 1965, some track record, right? Since 1965, S&P, a very low-cost S&P 500 index fund, right, has been given an annualized return of about 10%. Yeah, and with dividends reinvested and with a track record since 1965. Oh yeah, I already said 1965. Yeah, so it all depends on objective. So this short-term government bonds, right, if your objective is to use it as a replacement for the banks, because banks have a lot of requirement. you just want to go for this SSB, yeah, then it's good. But remember, the whatever government bonds that we talk about tonight, it will not make us any wealthier. So we have no other choice but to explore something beyond this bond, right? And of course, through Buffett talks about the S&P 500. Yeah, so in the next couple of seconds, Warren Buffett is going to explain in a very simple way how can you invest this in this S&P 500 index fund. Yeah, so I just need my colleague, right, to play this short video.
I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in 1 century, and then since that century has ended, it's more or less doubled again. American business is going to do well. The trick is not to pick the right company; it's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500, and to do it consistently, and to do it in a very, very low-cost way, because costs really matter in investments. If returns are going to be 7 or 8%, and you are paying 1% for fees, that makes an enormous difference in how much money you have on retirement.
At the annual meeting for Berkshire Hathaway this year, you introduced a special guest to the audience of 40,000 shareholders who were watching. It was Jack Bogle. Why did you want to recognize Jack Bogle?
I think Jack Bogle has done more for American investors than any other person connected with Wall Street or the investment process, because he, with a number of other people, he came up with the idea of the index fund. He wasn't the sole thinker behind it, but he was the guy that implemented it and crusaded for it. But now there's trillions of dollars in low-cost index funds. Those people are going to have better lives, they're going to have better retirements, their kids are going to inherit more money because of Jack Bogle and his efforts.
Okay, so ladies and gentlemen, welcome back. Now, if you look at the slide over here, I just need my colleague to present the slides. Now, these are the possible options. So let us lay out all the cards, right? Yep, so just now we talked about core inflation, 5.1, salary increment, 3.5. This is less than 5.1. Bank's interest lower, 0.05. Yeah, but there's various type interest and so on, right? And then CPF, you already know. And today we talk about the SSB and SSGB. So at least the most recent one for the Singapore Securities government bonds, right, is about 1.875%. And then SSB is about 3%. Yeah, so these are all the possibilities. Yeah, possibilities, huh? Yeah. Now, but if your intention, your purpose has a certain lifestyle like Monica, and you want to beat inflation, so I think this available instrument will be pretty challenging, right? So at least I played one video that Warren Buffett has, at least from his perspective, suggested a very low-cost S&P 500 index fund. And the interesting thing is the Singapore saving bonds requires multiples of 500. Yeah. And then for S&P 500 index, minimum is about 100. And that you can do it monthly. You can do it monthly. So the best part is you can do it autopilot. So that there is no perfect instrument. You cannot have like a AAA guarantee by government, and then government still have to guarantee 10%. There's no such thing. There's no such thing. So for a low-cost S&P 500, if you put in, right, because it is a security, because it's an example of stock, so it's subject itself to fluctuation. And many empirical studies have shown that the longer you keep it inside, the higher the return. Yeah, the longer you keep it inside, the higher return. Because short term, right, it may fluctuate both upwards and downwards. So here I've shown some facts, right, where it says that since 1965, dividend reinvested is about 10%, and this is S&P 500 index. Yeah, so if you want, you can take a screenshot of this, right? Yeah, so that you ask yourself, eventually, what's my end point? My end point is just leave the money there, okay? Banks and so on, bonds, I think it's fine. But if you want to grow the money, right, eventually, the choice, right, you have to see the ROI, pros and cons, and so on. Okay, So this is one, right? But of course, if you find that even 10% don't satisfy, doesn't meet your personal goal, right, then there's no other choice. Yeah, we just have to learn, like, you spend maybe like 45 minutes watching this, so at least you know what's going on. Yeah. So what we're going to do is I just want to let you know, if you are not our graduate, or even if you are a graduate, you can actually invite all your friends to attend our upcoming investing masterclass. If your objective, remember, let me just comment here, right? If your objective is to have more than 10, yeah, there's no other way out. Yeah, there's no other way out. And then I think about a month ago there was one research done. I'm not very sure is it by DBS. Yeah, I think about 8 out of 10 people, they really acknowledge that the only way, right, to grow the money so that when you reach a retirement age to have more money is to invest. Yeah, so ultimately as an adult, it's a choice. So I'm going to offer you the choice. Yep, offer you a choice. So on 20th of October and on the 1st of November, which is the evening, yeah, from 7 p.m., right? It's on site, it's not online, it's on site. On site, right? So you have to appear on site. 7 p.m. to 10 p.m. we're going to run a masterclass, and then it's going to be 3 hours long, right? But the interesting thing is we will learn how to generate 3 sources of income, or everything we want to have more than 10%. Yeah, there's no other choice but to learn, right? So you learn how to generate 3 sources of passive income, not 1, not 2, but 3, even if you know absolutely nothing about investing. So in other words, for the 120 people who are watching this YouTube live, if you have never invested before, I mean, what choice do we have, right, in life? So this is number 1, And number 2, you learn how to invest in minimal capital. Let me just quantify, it's Sing dollars, $100 per month. That is the minimum that you can get started. And of course, the best part is Warren Buffett has a special, unique investment method which will allow you to print cash literally, right, instantly, either on a weekly or monthly basis for the rest of your life. Yeah, so these are the things that value investors are doing. And I think for the past, how many years? 14 years, right? I've trained about 50,000 people across 11 cities in the entire Asia. Yeah. So other than the learning, there are also some notes that we're going to give you to you. So if you look at the YouTube link, right, you should be able to see 2 links that pops up right now. Yeah, they say hi everyone, and then there's a 20th October, there's a 1st November. You can choose either one. So as I speak, you just need to click, and then something will pop out. Yeah, if you cannot see the link, just refresh it, right? Refresh your browser, or close the YouTube, and then you launch it again. You should be able to see the link. So you click on it. It's just name, email, mobile phone, so that we can reach out to you. So it takes you maybe about 10 seconds, right? Yeah. So once you register, and then you appear on either of the evening. So what we're going to do is we're going to pass you a hard copy manual, right? Yeah, to get started immediately. By working on this S&P 500 that's recommended by Warren Buffett. So this is the manual that we got it from this company called DollarDex. DollarDex previously was owned by Aviva. I think about a couple of months ago, they were acquired by Singlife. Singlife. So remember, we're not the affiliate. It's just that because I have an account with them, right, and then they do not mind give us a soft copy for us to print. So since I have it, must as well I print a hard copy and then pass it to you. Okay, So remember, when you register, you appear on site, we'll pass you this hard copy. And then these are the learnings. Yeah, learnings, right? And your time is precious. Yeah, so what we're going to do is at the end of the session, yeah, we want to reward you in exchange for the investment of your time. So there's a return on investment. So previously, our masterclass is chargeable at $8, but today we're going to waive it off so that it's fully complimentary, right? So that after learning, we want you to we want to give you some reference material. So at the end of the masterclass, we're going to pass you a hard copy, not an ebook, a hard copy book, which is our national bestseller titled Invest Lah. It's an investment book. Right now is selling at Kinokuniya about $33. So we're going to give you a hard copy, right? Then at the same time, we're going to pass you a Starbucks prepaid card. It's an EasyLink card, right? But it's from Starbucks. And this Starbucks card, inside has a stock value, right, of $10. Yeah, so remember this Starbucks card don't magically have $10. We have to pay Starbucks $10 in order to have the $10 being deposited. Yeah, so in short, just by registering and then attend throughout the session, you will have something, right, physical, tangible, that's worth $43. Correct, And then we also want you to encourage your friends to come. Right now, inflation is so high, right? I mean, what can your friends do, right? So if let's say you bring 1 or 2 friends to our master class, we will also reward this 1 or 2 friends the same thing that you have, which is the book and the Starbucks gift card. And then not only that for you, because you make an effort to reach out to your friend, right? We will pass you a $20 or NTC voucher for you, not your friend, for you. Yeah, plus a $20 movie ticket for you. Yeah, so in other words, you have 43 plus 40. Yeah, so shopping and movies on us. And one of the key reasons why we want to do this is like a promotion. We want to promote ourselves. Yeah, so that we want to brand ourselves. So this is one thing that we do, and of course that includes the priceless training that we're going to give you. So ultimately, at the end of the day, I'm just going to end very quickly with a picture lah. This picture is quite simple. What kind of lifestyle do we want? By the way, I'm already 51 this year lah. So I think we cannot decide when we are 50 or 60, right? We have to decide when we are 20 or 30s. Yeah, otherwise we don't have time to invest, right? Okay, huh? So you ask yourself lah. If you sit here, you want to see Mount Faber, right? Or you want to see the Switzerland mountain, right? Yeah. So with that final call, so just now we talked about the masterclass. Again, you learn how to generate 3 sources of passive income, even if you know nothing about investing. Invest in minimal capital, 100 Sing dollars. And of course, the one that I'm really excited to share, right, is this Buffett's formula, where we can literally print cash using a method that Buffett used. Yeah. Yep. So these are things that we're going to give you, that we're going to share. Yeah, so the link is already there. Today is quite short, huh? Today we didn't spend 2 hours talking about it, right? Yeah. So today is going to be a short session. So we are going to leave the link over there. There are 2 links over there in which they are already there, huh? So for those people who are not our graduates, click on the link, register for any of the days. All these things will be for you at the end of the class. Yeah, at the beginning of the class, we're going to pass you a hard copy manual on how you can get started on this autopilot investing, right, for S&P 500 recommended by Warren Buffett, using only a mere 100 Sing dollars per month. Okay, so with that, there are 100 people who are watching this. So this slide actually marks the end of our sharing tonight. So today we're going to keep it very short. So later on, before you leave, if you don't mind, just do me a favor. Instead of just closing, can you see there's a thumbs up? So before you leave, can you just do us a favor? We spend some effort doing this. Just help us, just press the thumbs up on the video, right? A small encouragement, small encouragement, right? Yeah, so that's all for today. If you have any question, or in case any one of you want us to talk about any instrument that you are interested, we are more than happy to do it. You can just type in the chat box what are the things that you want us to do the work for you, so that next time you got something to share that is relevant for you. Okay, so with that, ladies and gentlemen, just take note, we are VIA, a value investing academy. We've been around for the past 12 years. So our mission is we care to make you a better investor. So maybe I just need my colleague help to just put maybe 5 minutes timer, right? Yeah, so after 5 minutes, we officially end this session. Yeah, so remember, before you leave, just don't mind, help us do a thumbs up. If you have any instrument that you want us to do research, right, please feel free to comment on the chat box, and we shall see you in our next session. And in our next session, we're going to talk about another popular instrument, at least in the social media world, called T-bills, or sometimes known as treasury bills. Yeah. Okay, so the timer starts right now. If you have any question, please feel free to type this. So remember, before you go off, do us a small favor, just do a thumbs up, right? Yeah, do a thumbs up lah, so that we feel shook. Yeah, so for those people who are not our graduate, please feel free to click on the link, register for upcoming masterclass. You know, there is no catch and so on. And for those people who are our graduates that are watching this, just bring your friends, don't let your friends suffer, right? Yeah, so I'm going to leave this slide over here. If you have any other question, please feel free to type in the chat box. Yeah, there's still about 100 people watching this. Yeah, so I see 34 thumbs up. Thanks. Before I go, if you don't mind, can you just do a thumbs up? Yeah, Angeline, thanks. Thanks. The next round we will talk about T-bills, and then I think we need to do a comparison. Yeah, comparison, so that they can reconcile. Okay, right now we have T-bills, we have SGS bonds, we have SSB. Yeah, so we have 3. So over time we will like add dishes, right, to the buffet spread. Yeah, so that as an investor, you know, okay, what are these? How are you going to do it? Which one suits you? Okay. So any other things that you want to ask before we knock off for the day? I think it's about 3 minutes. So thanks, Angeline. You make sure that you have a good rest. Yeah. So remember, before you leave, do us a small favor. Can you just do a quick thumbs up? Just take you 1 second, right? Yeah. So at least we feel encouraged to do more things for you. Okay. We have 44 thumbs up. Thank you. Okay, another 2 minutes plus. Yeah. Any other things you want us to do research on, or at least you hear say, right? Maybe you watch on YouTube video, somebody say, hey, somebody recommend me to buy this. Yeah, so you do us a favor by giving us some direction, some things that you want to do research on. Don't have. Hey, there's still 91 people watching this. There's 2 minutes. Yeah. So maybe I chit-chat with you for the next 2 minutes. You know, my background is in zoology, right? So usually I'm not so interested in macro affairs. But many years ago, I think about 21 years ago, when the dot-com bubble burst, I started to pay attention to macro events. And of course, recently, I think everybody knows some interesting thing is there is this bridge, right, that links from Russian mainland to Crimea, right? Crimea was detonated, so it was destroyed. Yeah, so there's a lot of speculation that maybe Ukraine is the one that does it. So there's one big event that's happening. And then winter is coming, right? December, winter is coming. So in Europe, you're staying in Europe, so winter is going to be freezing cold. So to keep them warm, they need gas, for furnace, a heater, and so on. Yeah, so for Europe, predominantly, most of the gas come from Russia. And the gas don't fly in the sky, right? There's a pipeline. Yeah, so there were 2 pipelines that transport this gas from Russia, right, to Europe. And these 2 pipelines, I think there's a name. It's called Nord Stream, right? N-O-R-D, Nord Stream. And then Nord Stream got 2 pipelines. There's a pipeline number 1 and then pipeline number 2. Yeah, so unfortunately, this 2 pipeline has been sabotaged by who? Nobody knows. Nobody want to say much, but it was sabotaged. Yeah, so that means gas leaking. Yeah, so if gas leaking, Russia can no longer transport the gas. Then guess what happens if the pipe is not fixed and then winter comes? It's quite serious. So it looks like a winter in the stock market, right? Winter in the war, right? And then there's a real winter it's coming. So I think this war is going to last a while. But for investors, I think it brings us really great opportunities for give us a very long time horizon for us to pick the companies that we want. Because right now it's still a bear market. Yeah, a couple of months ago, it recovered very quickly, but it drops back again. So right now, it's still bear market, more than 20% for most recent high. Yeah, so I have I think now very good chance for me to buy a lot of companies. Yeah, so if you're interested, remember, click on the link that you can see over there. There's a 20th August and then 1st November. And if you require any other dates, and these 2 dates not free, is okay. Just drop us an email at enquiries@mykinesis.com. Yeah, so I think it's 10 seconds. Okay, so ladies and gentlemen, we're going to go off. Hope to see you in our next YouTube Live, which is about T-bills or treasury bills. So remember, we are VIA Value Investing Academy, and we hope to see you soon. Okay, goodbye.